great to be back here. I actually started my career in Worcester 25 years ago. I lived here. I lived here a little bit in grade school, and then in my early 20s lived here for a couple of years. So it's nice to have this time to come back. I'll just talk sort of quickly about this technology, sort of give you an overview without the slides, and then I'll go through the slides really quickly, and then we'll have some time for Q&A, and that way you get to sort of hear it twice, because it is a interesting and complex topic that takes some thinking to wrap your head around. And I remember in those early days, the early 90s, when we started on the internet, it was very similar. You had to sort of demonstrate it to people, show people how this technology works. Just explaining things like chat rooms or email was tricky until we saw it, and now they're such a normal part of our life. And we never really saw, very few people saw where the internet would bring us. We couldn't conceive of, drones that can fly around in your backyard and babysit your kids, and you can see it on your iPhone. iPhone has been around less than 10 years. So the world is changing very rapidly, and I think that this technology is a very big deal. Personally, I think that it is as big of a deal as certainly the internet, maybe the printing press. And for a long time, I'm starting to alter the way that I talk about this technology. For a long, long time, being a former financial advisor and governed by financial regulations for so many years, I had it ingrained that past performance does not guarantee future results. You could lose every single penny that you put into this. It is highly speculative. It is an experiment. And I may have undersold it a bit because, I've told people that for 5 years, and probably a lot of them maybe didn't invest because of that. And what I say now instead is that all of those things are true. It still is very risky, but I think it's a calculated risk. As crazy as it may sound, and as much as it goes against everything that I knew about asset allocation and everything that I practiced and preached as a financial advisor, I actually am 100% into this currency, and I have no plans of ever liquidating because I believe in it. So rather than say maybe this is going to crash to zero, I've altered that and said I don't think it's going to. I'm going to share why I don't think it's going to, and then you can make your own decision. And it's really a matter of whether I'm right or wrong. I may have been lucky so far. The people who have followed this technology, it might be happenstance, it might be luck, or maybe, just maybe, we're onto something and this is real. And that's looking a lot more likely now at a $150 billion market cap than when I gave these same types of speeches 4 or 5 years ago when we were looking at a $1 billion market cap. And there was absolutely no interest from any banks or any venture capitals or any investment firms or any hedge funds. In the early meetings, even attorneys didn't show up. Even service providers weren't there. And everybody in the room had another job because nobody could support themselves on Bitcoin and blockchain alone. The first paid developer, Gavin Andreessen, which is paid by the Bitcoin Foundation, which I used to be the head of, was probably for a good period of time the only person working as a professional in blockchain space. There was like 3 developers, they were paid. When I started in this space, there might have been 10 people total who had this as a job. And then there was a couple startups, Coinbase, BitPay. Coinbase is now a $1.6 billion company, and they didn't even exist 4 years ago. So I saw my friends start these companies and grow, and miners who started with a laptop, and they could mine coins that are now worth a lot of money, and that grew into these huge data centers. So let me just get back up and talk a little bit about what the technology is. What is Bitcoin? What is blockchain? What is Ethereum? What are all of these things? A blockchain is, at the end of the day, a better ledger. That's all. It's just a ledger. A blockchain is a ledger. It's a better way to make a ledger. Now, why is that important? Because ledgers run everything in the world. If I were to ask you how many times you interacted with a ledger today, your gut reaction might be, I don't know, a few times, 4 times, 5 times. It's probably hundreds of times. It's hundreds of times. There's ledgers that represent everything from There's a ledger out here that gives you your name tag. It's a ledger that says, yes, you're authorized to be here. There's a ledger at Holy Cross College that says that the Economic Club is allowed to be in this building at this particular time. Ledgers that represent your title for your car, your driver's license, your license plate, those are all tied to ledgers. The statements of truth about what governs our world and the way that our reality of business and economics work, it's all driven by ledgers. I'm always fascinated coming from the financial business of people, these hedge fund managers who break these records and get $1 billion pay in one day. Even a transformative amount of money like that, it's just a ledger entry going from one bank to another saying, this is a statement of truth, the $1 billion was here, now it's over here. So what if you built a better ledger? We don't think of ledgers that much because they're kind of boring. But as I just said, they're a part of the very fabric of our lives and the way that business works and the way that the global economy works. So ledgers are a very big deal. What a blockchain is a better ledger. And this invention came out in 2008 by an anonymous person or people named Satoshi Nakamoto, who wrote a paper about something called Bitcoin, a peer-to-peer cash system. And in that paper, he or she also invented this blockchain invention. Bitcoin and blockchain came out together, the same paper that created them. What a blockchain is, as I said, it's a better ledger. So let's think for a moment, if we're trying to build a better ledger, let's really understand what a ledger is. It's a statement of truth. And for the existence of ledgers, we've always relied on a trusted third party. Bank of America says, yes, this $1 million is yours, now it's over here. And Chase says it's yours. That's a ledger that represents that, your credit card, all of these things. So we've relied on these trusted third parties to say, yes, this is true. Well, what Satoshi Nakamoto did is said, well, maybe there's a better way. Maybe instead of relying on one trusted third party, who could fail, be compromised, be hacked, be destroyed. There's wars, there's government seizures, there's any number of thousands of bad things that can happen when you have things centrally controlled. Even in the United States, even in developed economies, we've seen it. We've seen people in the 2008 crash who had, even people in the money market who had money frozen for a long period of time. We've seen much worse things in other countries. Cyprus, a developed economy, if you went to bed on a certain night, a certain time a few years ago, you had $100,000 and you woke up and you had $70,000. They just took it, the Cyprus haircut. They took it because they wanted to pay for failed banks. We see these things even in developed economies, even in the United States with things like the collapse of Lehman Brothers. So there are risks of having a trusted centralized third party. Why would you want to use a bank, or why would you want to use a trusted third party? And the answer is really because that's the system that we've had for a long time. So the improvement on this statement of truth that a blockchain offers is that it enables the peers, the group, to say what is true. So right here in this room, I could put a ledger on one of those old green ledger books. I could put it right there on the podium, on the stage, and I could say, I'm giving Brad $1,000, and I'm writing it here in front of you. Everybody is my witness. On my honor, this $1,000 belongs to Brad now. That's pretty good, because I've sort of given some social proof. You know, it's unlikely I'm going to go back on that. Now, if everybody in the room comes up and initials it, say, yeah, Bruce, this is real. You're giving that money to Brad. That's really good statement of truth, because now we have a community that's done it. So what if we make that even better? What if we put it on a Google document and we share it with the whole world? And the Worcester Economic Club can do it, and the Singapore Economic Club can do it, and the Dubai Economic Club can do it, and a computer operator in Brazil or Kansas City can also verify and say, yes, this is true. Well, then it's a very good statement of truth. And what if we do it again every 10 minutes? Then it's even better. That's really what a blockchain is. In the case of Bitcoin, it's every 10 minutes. You have a peer network of a whole bunch of computers that say what is a statement of truth. And they verify it again every 10 minutes. So rather than a trusted party that says, yes, this is true, you really do have this money in your account, we have a peer network, kind of like a Google Docs, that everybody can see and everybody can verify it. Now, obviously, it's not Google Docs. That wouldn't be secure. People could hack it. There's all kinds of other issues with it. And then we have the issue of privacy. We may not want to have anybody know that I'm giving this money to this person. So cryptography solved both of those things at once. Cryptography made it so that it doesn't say Bruce gave $1,000 to Brad. it says Bruce gave 0.25 Bitcoin, or it says this number 1-384 blah, 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 gave 0.25 Bitcoin to this long number. And that transaction is done on a mobile device or whatever, and then it's broadcast on the network, and then all of these peers verify that it's true. So the network says, yes, this is a statement of truth. And that all of the statements of truth, everything that happens in 10 minutes, maybe thousands of things all over the world that happen in 10 minutes, transactions saying this address money is now over at this address. Those are blocked together in a 10-minute period called a block. And once that is verified by the network, it's printed on the computer network, and then the next one comes along, and you end up with a chain of these blocks. So after 60 minutes, roughly, it depends on computer power and some variables, so it's not exactly 10 minutes, but roughly in 60 minutes, a transaction will have been verified 6 times. So then it has thousands of computers that have said, yes, this is true, yes, this is true, yes, it's true. So it's a very, very good statement of truth. If you want to hack, Equifax, you have one party, you just one point of control, one point of failure, very easy to have it come crumbling down. If you want to hack Bitcoin, you can't, because you have to, and I didn't understand this is something that is difficult. I'm not a computer scientist, but when I got into this, I said, no, that doesn't rub me the right way. I'm not an expert, but I can tell you anything can be hacked. If somebody can build it, somebody can hack it. And I'm sure there's some genius somewhere who's going to eventually figure out a way to hack it. Then I understood the concept a little bit more and realized that as bold of a crazy statement as it is, you can truly say Bitcoin cannot be hacked because you have this ledger. So again, you take that green ledger book, I print it here, and I simultaneously print it in the Singapore Economic Club and the Dubai Miner and this person and that person, and we all verify it. How are you going to hack that? You'd have to get into every single one of those computers and change it, and then you would see it because it's transparent. So the only way to actually change this network is if you have more than 51% of the computing power, which now would cost $500 million or more. You'd need all that power and everything, and you'd be able to change it once, and everybody would see it. And it would be a crisis in the space, but people would say that isn't a real transaction, let's go back to the other chain. So it's very, very, very difficult. And when you get into this, and I'm simplifying it, the scenario is really more like a James Bond villain kind of thing. I mean, you would need to do extraordinary things to mess with this network, and it would still be transparent. So that's what we have. We have a better form of stating what is true. That's what a blockchain is, better ledger. The first killer application of blockchain was Bitcoin technology. And Bitcoin is basically money, and we realize that blockchains are very good for transferring something of value. Let me get a volunteer, somebody whoever's quickest to do it. Go ahead and pull out your phone and download an app called Blockchain, just Blockchain Wallet. And once you're done with that, so you download it, it'll ask, you put in your email, whatever. Once you're done, first person who has it ready, when you have a thing that says receive, just raise your hand, let me know. I'll send some Bitcoin to you to show you an example, because seeing it is more valuable than me explaining it. So we realized that ledgers are very useful for things of value like money, to say what is true, who has what money. It's a very core principle of the global economy. And it turns out that blockchains are also good for other things that have value, and I'll get into that in a second. So this young genius named Vitalik, when he got into Bitcoin when he was about 16, used to be a writer for Bitcoin magazines. He'd hang around Bitcoin conventions. And he got to the idea by the time he was about 19, he said, well, maybe you could take this decentralized concept and you could put an entire computer program on it. So you could have a ledger or a decentralized blockchain where it runs mini computer programs or even complex computer programs. And you could do a smart contract. So you could have like an if-then function. If you pay this or your car gets in a wreck, we pay this insurance amount. And that platform is called Ethereum. And that's now grown to be about a $25 billion project. And it's got very, very significant people involved, companies involved, many big banks. And there's been hundreds of tokens that have been issued sort of on top of Ethereum. using their blockchain rather than come out with their own blockchain for each coin or token. There's other coins that are using, sort of sharing the Ethereum blockchain. So Ethereum was one of the other uses of this, and there's been a lot of them. As I mentioned, there's hundreds of these coins that sort of, some of them started as copying Bitcoin, some of them had slightly different features. Litecoin was one of the early popular ones. It was basically a clone of Bitcoin, slightly faster. Instead of 10-minute block time, it had shorter block times, and very clever marketing. The founder, Charlie Lee, called it silver to Bitcoin's gold. And so that's still around. And there's all kinds of different coins that have different features and different ideas and different founders behind them. So let me get into the details now, but I wanted to give a kind of quick overview because it is complex and it's, I think, worth it if you go. So here's what I'm going to talk about, as I've already mentioned, sort of what's happening in the tech. And by the way, this is very big now. As I mentioned, the market cap of cryptocurrencies is around 150 billion. And there's also probably an even more significant amount in venture capital. As I mentioned, Coinbase is worth 1.6 billion. There's been billions and billions and billions of dollars that have flown into this space in the form of venture capital and other investments. This is my background. So yeah, here's the town square ledger. It's important also to note that nobody owns this. It's a protocol, it's an idea, it's code that anyone can run, anybody can use it. You can set up what's called a node. You can validate your own transactions and print out download the entire blockchain, see every transaction. Somebody must have that downloaded by now. Right here? Okay, come on up. So this is, hold on one second. Just take me a second to get mine open. So I'm opening up a Bitcoin wallet. I chose blockchain just because it's pretty easy, simple interface. There's plenty of other good ones.
Right after I'm embarrassed.
Yep, that's right. So I have this send, and you're going to hit receive. Okay, and I'm going to hit send. Oops. And then I just scan. She has a QR code here. This a public key you can share with anybody. It's like your email address or your phone number. All you can do is send money. So I couldn't hack this. I can show it. It can be on the camera. All anybody can do is what I'm going to do, which is send her money. So I scan it like any other QR code. I'm going to send her $3, which is a lot of people ask, do you have to buy a whole Bitcoin? You don't. Bitcoin is worth about $4,000. So I'm going to send her 0.0007209 of a Bitcoin. So it's a little piece. Now, I've done this over 1,000 times. Some of these people's phones worth $100. She got it already. See that? She got it. Just that fast. Now thank you. Let's give her a hand. So did you see that? I don't know her name. She didn't have to do AML, KYC. I could have sent her $1 million just as easily. I could have sent her money in North Korea or Iran, which is illegal for the United States. And I would be breaking the law, but there would be no force that could stop me from that. It is a protocol that it is between me and her. She now controls her own money. That $3 cannot be seized by any force on earth. There is no subpoena. There is no central organization. There is nothing that can take that away. So for the first time in our lives, we have control of our own money, and that's an interesting concept. And it's kind of sort of like, why shouldn't we? It's our money, right? We should have that power to have that sovereignty where she can control her own money. So it's important to note that nobody owns this. Here's a chart with a lot of the major companies. As you see, everybody's on this now. Fidelity, Citibank, New York Life, it's a huge thing. And there's a lot of really sharp people like Mark Andreessen, Richard Branson, Eric Schmidt, on and on and on, that are jumping in this or believe in it. Another neat thing about Bitcoin, it's limited to 21 million coins. So a lot of people say, well, who runs it? Satoshi Nakamoto, nobody even knows who Satoshi is. There's a person who came forward and said he was Satoshi. Some believe him, some don't. It doesn't really matter too much because we're in a new world now where things are dictated by code and rules of math, not by people. There is no Janet Yellen who can decide to inflate currency or devalue your currency for any cronies or war or whatever they choose to. It has to be done by code. It's also global money, so there's no central control, and your Bitcoin that I just sent you can be used in Senegal or China or anywhere else. It's global money. And you can sell it just like a couple of people asked, how do you buy and sell this? It's just like a stock. It's just like converting from dollars to euros. You find an exchange that will do it. And there's some large ones like Coinbase that specialize in this. You send them your dollars, you buy Bitcoin, you send them your Bitcoin, buy dollars. And you can also use it for purchases, accepted by Dell, Overstock, Microsoft, other major retailers. There's billions and billions of dollars worth of commerce that are being done with these kinds of transactions. Overstock actually accepts 40 different cryptocurrencies. They accept Bitcoin, Litecoin, Ethereum, Monero, Zcash, Dash, all down the line. There's a lot of these currencies out there. So you can go on Overstock and buy giant projection television or whatever using Bitcoin or something else. This is sort of an illustration of the difference between sort of the old school ledger, and then you had clearinghouses, which would also serve as an intermediary function to say what is true, and then this new decentralized model where the peers, the participants, the users in the system are the ones that are saying what is true. So this blockchain is updated continually. They don't do this anymore because the chain got moving so fast. This is from 6 months ago. In the old days, it would take minutes before you'd see a transaction. Now you can see this from six months ago. There's quite a few flowing by, but eventually it got to the point they took this feed off of this. This is a block explorer. It happens to be also called blockchain. That's the name of the company. But there's a few of these where you can see what is going on. So your transaction, the $3 that I sent you, is on a blockchain now. If we were watching it live when that happened, we would see the transaction if we were fast enough to see it. But you can take your address off of your phone, you can put it in your Block Explorer and see that the money is there. And now probably one confirmation has gone by. As I mentioned, it's every 10 minutes. So, after an hour, you should have 6 of these confirmations, and then it's considered a very, very, very solid statement of truth. So yeah, it was 4 minutes ago that I sent it, so it hasn't confirmed yet, but it will. So this is so the other neat thing about this, how do you issue Bitcoin? Who issues it if there's no Janet Yellen? What would we ever do without her? Well, we have code that decides how many coins there are and how they're issued. And the issuance curve is similar to gold. It started out at 50 coins every 10 minutes, went down to 25. Now it's at 12.5 Bitcoin every 10 minutes, which is $50,000 or so. And that's issued into the system. And people called miners do 2 really neat things. In the creation of Bitcoin, one thing I mentioned is we all verify the network. Well, why? Why would you want to do that? Now, there are hobbyists and there are diehards and there are people who care about it a lot who will run a computer just because they want the network to be stronger. But that's not quite enough for us to depend on changing the global economic system. So we want to have an incentive in there. So we have a huge incentive. You can make $50,000 every 10 minutes if you're verifying the network. Now, the early miners, back when it was 50 coins every 10 minutes, it was only worth $1 a coin. So people would turn on their laptop and they'd get 50 coins, and if they held those coins, that's a couple hundred grand now. And there's a lot of people who turned on their laptop at the right time in 2009, 2010. They validated the network. Some of these people will have millions and millions of dollars worth of coins now. They were issued, 2 things are done by mining. One, it serves as an issuance mechanism. If you invent a better mousetrap, you invent a better currency, how do you get it out there? You can't just say, all right, I'm going to own it all and I'm going to sell it to the people. That wouldn't be a fair method. So the creators of Bitcoin made it so that those who validate the network and use all that computing power to say, yes, this is true, they're going to get rewarded. And the more computing power you put on it, if I have a $1,000 computer that verifies the transaction that I did with Brad or with you, that's not as good as if I have $1 million worth of computer, putting a lot more computing power into verifying what is true. So this is what mines, this isn't even a great picture. Mines are huge these days, much bigger than this room. A lot of them, you can't mine on your laptop anymore. Those days are long, long gone. But mining, because it is so profitable, is gravitated towards large data centers. Some of these companies are doing hundreds of millions in revenue with huge, massive energy spending on computing power to verify the network. I mentioned that this has spawned a lot of other coins. There's now over 900 different coins. And I mentioned Ethereum, smart contracts. There's all kinds of other neat things for this. Basically anything, there's a great saying from a fellow named David Johnston, a friend of mine in this space. He said, anything that can be decentralized will be. So a lot of things like healthcare, insurance, accounting, there's going to be a lot of functions where whenever you have a trusted third party where you say, well, we use them because we need to, those types of models are going to go away. And it will start with assets, currencies, cash, and I'm very big on securities. I think that all securities are ultimately going to trade in blockchain assets. Why wouldn't they? I mean, there's a lot of financial advisors in the room, and there's even probably everybody in the room is a client of a financial advisor. So most of you have gone through a process called the ACAT system, which you know well, and it can take 3 to 11 weeks to move your account from Merrill Lynch to Morgan Stanley. If you're clearing through National Financial, which is owned by Fidelity, and you want to move your account from Fidelity Wealth Management to a correspondent broker who clears with National Financial, your money isn't even leaving the room, and it can still take 3 to 12 weeks. And that's if everything goes well. If you're Amish and don't have your ID and can't comply with the Patriot Act, or you moved, or somebody died, or you have your executor written wrong, you could lose access to your money for months. So you saw how easy it was that I could transfer. What if I transferred your entire portfolio and I said, okay, bang, I just transferred $100,000 and it's diversified across large cap growth, small cap value, international bonds, high yield bonds, tax-free bonds, and it's perfectly done to your situation, and I could transfer it instantly. And then if you don't like me as a financial advisor, you can switch to our friends here just as easily. That changes the entire metric, and people are going to, that's what it is like when people control their own money. Banks, asset managers like I used to be, rely on assets under management, and those days I think are going to go away, because it's just you don't have to believe my theory. Just ask yourself if what I just did is superior to doing 3 pages of triplicate paperwork that'll take 12 weeks. I don't think anybody in the world, even the inventor of the ACAT system, who is probably no longer alive because these are decades old systems, would agree that what we just did is not vastly superior to everything else that exists. So I think everything will move to that. There's a lot of opportunities, and this is a great community of very knowledgeable people who are leaders in this great community. And like I said, I came from here, so I really love Worcester and the vibrant and close-knit business community. And it's got a lot of great advantages with great schools like Holy Cross, Assumption, WPI, and so on. So there's a lot of neat opportunities. You can hold tokens directly. There's some investments in venture capital businesses. A lot of them are receiving venture capital funding. Although that is changing because of the popularity of their own technology. A lot of them are issuing what are called ICOs, these initial coin offerings, where they're using as a fundraising mechanism. And unfortunately, like many new fundraising mechanisms, it's fraught with junk and some scams and some fraud. I think that's to be expected in a gold rush. I'm very bullish on the concept of ICOs. I would not recommend buying almost any of them, probably none of them. I think they're, right now, very risky. And as I said, a lot of fraud. But I'm very heavily betting that the mechanism will exist. It's just like the internet. The early days of the internet, there wasn't really any legitimate companies. When the first GE-type companies had websites, it was big news, and those of us on the internet were high-fiving, wow, GE has a website. And that's the way it was 3 years ago with Bitcoin, when progressive visionaries like Patrick Byrne, the CEO of Overstock, said, yeah, we're going to accept Bitcoin, and was one of the first real major retailer companies, a publicly traded company. It was a big deal. So I think we'll see the same with ICOs that start low quality and gaining quality. So, and there's a lot of things that you can look at how to implement this into your own business and your own work. I think that it's a big deal that is going to really change the world in a very radical way. And I'm not selling anything. I don't, I don't have any. I'm just telling you what I feel and what I think is true. I don't have anything to gain, particularly if you are involved in this space or not. But I really believe in it, and I think that everyone owes it to themselves to at least spend a couple hours looking at this. And maybe, just maybe you'll end up like I did and really, think that we're onto something that is a big deal. And a lot of people go down that rabbit hole and they don't come out. And very rarely do I see people who really research it and really get it, who don't become more and more bullish and more convinced that this is a wave of the future that could be a change. Because not all bubbles pop. And there is a lot of hype and there's a lot of activity running into this, just like there was with the internet. And money systems change. Money in the world was once, cows, and then it was rocks. And then somebody said, well, wait a minute, rocks, that's not a good form of money, let's do shells. And then somebody said, I've got a really brilliant idea, let's take a, thing and make a coin. And then somebody said, well, what if we use a rarer form of metal? Let's make a coin out of copper. And then they had gold coins. And then somebody said, well, I know, we'll just print a bill that represents the gold so we don't have to carry it. And each time, I'm sure that the rock merchants said, oh, no, nobody's going to use shells. Shells are just a fad. And now you see that today, the rock merchants, and you can't explain electricity to a candle merchant. So it's changing rapidly, and the world does change. The dollar and the current system that we have of fiat money controlled by governments, regardless of your political leaning, I guarantee you, if I put 500 people in a room and said, design the perfect government from scratch, almost none of them would control our money. You'd have people on the liberal, conservative, libertarian. You'd have people say, I don't want government to do anything. I want them to mind our own business. You have people saying, let's make the greatest schools in the world and the greatest hospitals. You'd have some people who like single payer. Almost nobody would say, oh, wait a minute, I've got it. Really good central bank. It's not a function that we really need government for. And for the first time in our lives, you can not only control your money, but you have global money. You have money that can be used everywhere else. So for the first time in our lives, governments have competition. And they are drastically behind on understanding a competitive environment. They've taken it for granted that everybody in this room denominates their wealth in US dollars. Why? Because we were born on this particular piece of dirt that happens to use these particular pictures of dead people that somebody says is worth something. We didn't do it because we chose it. We didn't do it because we objectively said, wait a minute, I'm analyzing this, and I think that the dollar is stronger than the euro. We use the dollar because that's what we've been fed. And this isn't news for an economic group, but what you've been fed is kind of dog food. It's highly inflated, highly manipulative with fractional reserves. And when you have inflation increase year after year and your gallon of milk goes from $2 to $4, that doesn't help you. It helps people at the top of the food chain who are loaning out very cheap credit to, frankly, cronies. And we have these large bailouts. And again, whether, regardless of your political leanings, whether you like how the money is spent or not, there isn't any denying that a lot of our money is being devalued because they're printing new money and spending it. So now we have a choice. We can say, yeah, you know what? I kind of like this 21 million fixed supply that some person who I don't know who the motivation is named Satoshi created years ago. I might trust that more than Janet Yellen. And as we have more money flowing into this space, 150 billion that has happened without brokers, without banks, without really even salespeople, it shows to me that some people are getting into this to say, wow, this is maybe crazy, maybe I'll make a little money and get these high-flying returns that I've heard about. We're talking at the table about, people who turned on their laptop at the right time. Ethereum, which I invested in on day one, has a 4,000x return. When we founded it, we raised 18 million. It's now 25 billion. So people hear about these outsized returns and want to participate, and that's fine. Speculation is one thing that attracted me, but what kept me and got me really interested in this is once I started to say, well, why? Why is it going up? Why did I make money on this? Is this, do I cash out, or is this a real thing? And the more I researched, the more I became convinced. And it's been an ongoing process over many years, but now I'm well past the point where I'll simply never sell, I'll never exit. There is no day where I go back to inferior money when I've done well with superior money. And I just think that a lot of people will come to that same conclusion as they research it and ask questions about, what is money and why does it work? So I'm sure there'll be a ton of questions. I'll go ahead and open them for you, but thanks very much.